to the May 2025 Real Estate Market Update brought to you by the Reby Homes team. Starting with national home price appreciation, on a grand scale, prices are very steadily increasing, but it's heavily dependent on the specific market. Some cities are seeing declines, while others are still rising at a healthy rate year over year or remaining stable. As always, headlines are doing a great job of keeping consumers extremely confused with what's happening in the housing market, as 32% of people who planned on buying this year are now waiting. The uncertainty in the economy is causing a mass pause. Although there's concern from consumers that the housing market will crash, economists disagree. Inventory is rising, which is partly to blame for the concern. However, demand still doesn't outweigh the supply across the country. Unless economic factors drastically change, the simple law of supply and demand will remain. What we can expect is for prices to remain moderate nationally, fluctuating from city to city, of course. But they won't be skyrocketing, and they are not expected to significantly decline either. Subtle declines in some markets are highly likely, but across the board, stability is expected. Freddie Mac also expects prices to moderate from 2024 levels, but still maintain on a positive trajectory. Mortgage rates are the hardest thing to project in the housing market. March saw stable rates, while April showed a lot more volatility. Uncertainty is a massive factor in mortgage rate activity, so when can we expect more stability or predictability with rates? Well, Jerome Powell stated that they don't have plans to cut rates until they have greater clarity, so we can expect them to remain volatile around the high sixes until inflation, unemployment, and uncertainty all see positive changes. While unemployment has remained steady, it'll need to increase to cause any changes. Inflation has also seen some positive downward movement, but not enough to cut rates quite yet. And uncertainty with tariffs and other economic factors still remains high. So until those three factors see consistent trends in the right direction, don't expect too much rate movement. If we continue to see positive trends for all three of those factors throughout the remainder of the year, then we can expect to see small rate cuts, maybe reaching the low sixes by year end. Projections throughout the end of 2026 are showing low sixes, but again, these are just predictions that are based on what's expected to happen with consumer spending, debt, unemployment, inflation, etc. So although they are expert predictions, they're just predictions. As for recession talk, dating back to the 1980s, following 4 out of the last 6 recessions, prices increased, and following all of the last 6 recessions, mortgage rates decreased. So fear of recession causing the housing market to crash just isn't statistically logical. Bottom line, the national housing market is still hanging in there. In most markets, buyers are in the driver's seat with negotiations, but most sellers are still winning thanks to record high equity. And now a quick look at our local Phoenix market. April was a bit of a hot mess with lots and lots of crisis headlines, which keeps our consumer emotions high and confidence low. For example, this Newsweek headline that read, "Phoenix housing market faces a mass sell-off as home values plunge." The reality is that pricing is actually pretty stable year over year. Some markets saw a slight increase while others saw a slight decrease, both around the 2% range, but no market saw a plunge in value. However, the longer we go with flat pricing, the less equity sellers have to give in to buyer demands. So sellers are in a position where they need to make a decision that'll be right for them in the long run, not the short term. That might mean giving up a little extra equity now to appease buyers and make it to the closing table. The other option is to wait for market conditions to change and risk losing more equity in the meantime. Buyers have had the upper hand in most Arizona markets for the last 7 months, and until we see changes in rates or buyer demand, that's likely to remain the case. Price per square foot going back to January of 2022 shows some volatility. December of 2022 was what we can now call the bottom of the market, where price per square foot reached a low of $268, and it's ebbed and flowed since then, with April of this year ending at $301 a square foot. But if we pull back a little further, we can see that even at the bottom in December 2022, we've remained much higher than pre-pandemic years, meaning those who purchased in 2021 or earlier are still sitting in a very strong equitable position, whereas those who purchased in May of 2022 or later may not have that same equity available to offer to buyers. So while there's certainly homeowners that are sitting with little to no equity right now, that's not the case for the vast majority of homeowners. Just to put this into perspective, if every single homeowner who bought in mid-2022 or later defaulted on their loan, we still wouldn't have a housing crisis. The number of homeowners with 50% equity or more far, far outpaces those who could be at risk. Of course, that doesn't mean we won't continue to see price corrections. We absolutely will, along with an increase in seller concessions, just in much smaller increments. And that's actually a positive for those looking to buy. Affordability will continue to improve as more options hit the market and rates remain unchanged. And that's something to celebrate. For most sellers, they're still in a position to walk away with a healthy gain, even if it means giving up more equity than they'd like. And overall, the state of the market is much more balanced, with a slight tilt towards buyers. So whether you're looking to buy or sell, this could be a good market for you. As always, we're happy to help you figure that out. So please don't hesitate to reach out. We're here to help. Thanks so much for tuning in, and we'll see you next month.